Hi everybody, I'm Sergi KKMB and thanks for joining me for the weekly US market report. Time to trade the markets, the week ahead, and perspectives and analysis. First, we're going to have a look at the economic calendar. Second, we're going to have a look at earnings, what's left for the earnings season. Let's say until end of the month. And next, we're going to have some look at some news. We're going to see what's happening. Next, we're going to have a look at the S&P 500 sectors maps. And next, we're going to have a look at charts. Okay, that's for the trading beginning on for the week ending on Friday, August the 25th of 2017. Okay, so that's it. So without further ado, let's begin. And first of all, here we are at the economic calendar. Let's see what's happening for this week. The week beginning on Monday, August the 21st until Friday, August the 25th. That's the last trading week. We're going to have some day remaining at the other week until August the 21st. But these are the most relevant, the most important economic data release for the week. And first of all, here, let's go to Germany. We have the ZEW Economic Sentiment Index for August. And on Wednesday, August the 23rd, 2017, we are back in Germany for the market manufacturing PMI flash from August. And next, for the European Union, the EU, we're going to have at 4 p.m. the consumer confidence flash for August. And next at 4 p.m. we are back in the US for the new home sales from July. So that's it for your economic calendar. And next, let's move on. And now let's go to the let's have a look at earnings, and we're going to see what's left for the earnings season ending on Friday, August the 25th. As you can see, we also have August the 29th. But first of all, let's have a look at some major and great companies that are going to report earnings this week. And what do we have? We have Salesforce. See over here, salesforce.com. Next, on August the 23rd, we have Lowy Companies, LOW. And next in the US, we have Tilly's, TLYS. And on August the 24th, we have VMware, VMW. And on Friday, August the 25th, back in the US, we have Actinium Pharmaceuticals. And that's it. So as we are here, you can give the last US company to report on this month of August. On August the 29th, we're going to have Caleres, CAL, reporting on August the 29th. Okay, so that's it for your economic calendar. Now let's have a look at news. And we are here at 3wbusinessinsider.com. And we are looking at finance. So let's see what's happening in the world. So let's see if we have some catalysts. You already know that the markets are in a sell-off mode. We see some drawdowns. You see the markets going down. Now we are back under the 22K mark, and most of that is due to recent political problems, in the US and also outside of the US. And here, first picture, what did you see? You see exactly the US fired the first shot in a trade war with China. So that's really important, and you see exactly what's going to happen. And next week, in a few weeks, we're going to see also entering in fall. This fall, we're going to see impact on the markets. See if here people are talking about this particular article is talking about trade war. You know that trade war is directly related to Forex, the foreign exchange market. So have a look at the dollar, US dollar versus the Chinese renminbi or Chinese yuan, as you want to call it. So that's it. We're going to see some impacts over that. And also, remember, all the problems we have back in Charlottesville last week. You see all the tweets, the President Trump speech, all the CEOs stepping down, problems with North Korea and stuff like that. You see Russia intervening, you see China intervening, the sanctions, the EU, so all of that. You see it's a lot of things. You see now the Dow is back at 21,674 points. The Nasdaq also is going down. S&P 500 also going down, and you see also here the FTSE 100, the Britain stock market also is going down. So that's worldwide, you see. And now let's continue with other news. Here we have billionaire Carl Icahn is reportedly in legal jeopardy for trying to influence Trump policy. So also take a look at that at your own discretion. Over here, hedge funds co-founded by a 32-year-old has raised over 100 million to make bets based on other hedge funds. Here we have that. Next, over here, co-founder startup Robinhood talking, but that's not what I'm looking for. I'm looking for buzzwords, company names and stuff like that, you see. Over here, hedge funds betting on stocks are having their best year since 2009, but they're still getting smoked by the markets. An ADP director has a relationship with the activists trying to shake it up, and it shows how messy Wall Street really is. Over here, something about Britain. Britain will not exclude possible EU oversight of UK borders after Brexit. See over here also talking about Brexit. Two Cambridge grads on a Money Supermarket veteran raise £1 million to build the Airbnb of marathons. Over here talking about the central London house market. Over here back in the US, what do we have? We have Mnuchin, Mr. Steve Mnuchin responds to Yale classmates. Trump does not equate neo-Nazis with peaceful protesters. So you see that's the reason why a lot of CEOs stepped down. It was about those Trump commentaries, when he was talking, and really, wow, that stuff, that stuff. So that's it. That's the only thing I can say, and that's it. So here, talking about trade accords, you see, trade relationships and trade policies. US did not detail requests for other rules of origins at NAFTA talks. Over here, what do we have? Billionaire barrage Lee Cooperman is stepping up his attack against Bill Ackman. What else do we have over here? Is the memo Larry Fink, the head of the world's largest investor, just said to staff about Trump conceal. You see, one more time, the story about Trump. Over here, what do we have? Warren Buffett dropped GE, General Electric, and signaled the end of an era. So that's huge. So that's now we're gonna have a look at the repercussions, you see, for that particular stock, and let's see what's gonna happen. Down here, a hot fintech startup has amassed nearly $5 billion from people willing to hand over their bank logins. So yeah, that's pretty shocking. Now people are handing over their bank logins. So wow, this all cashless society, fintech type of stuff, in my point of view, is going out of control, and people don't really realize where we are heading. You see. But it's growing faster and faster with the blockchain, ICOs and stuff like that. So, wow, that's it. Here, talking about energy, Alaska has a choice to make regarding its oil future. So over here, we have talks in energy. We're also going to have a look at oil charts to see what's happening with oil prices later on. So bear with me, please. Over here, you're talking about immigrants, credit cards are going the way of fax machines. Oh, yeah. And over here, Saudi Arabia's financial constraints are starting to limit its ability to project power. And if I'm not mistaken, here on the picture, it's Prince MBS Mohammed bin Salman. And so at your own discretion, you can read the article and see what it's all about. And over here, what do we have? Tech unicorn IPOs are booming. Okay, Goldman Sachs has hired a former Silicon Valley executive to recruit tech talent. Okay, so they're making moves. Oh, Martin Shkreli. People gave brutal explanations of why they couldn't serve on Martin Shkreli's jury. Okay. California, there's known why Not Spot was named best small town to visit in America. Take a look. An activist hedge fund has reportedly amassed $400 million stake in yogurt maker Danone. And some of the words of the hedge fund, yeah, we already see those titles last week. Yeah, over here. So that's it for the news. Okay, so remember, what do we see? Trade wars. That's what's gonna these might have repercussions on currency markets, also precious metals, gold, silver, stuff like that. We see Saudi Arabia, we see energy, so oil, and Warren Buffett's dumping GE. So next we're gonna have a look at that. Okay, so that's it. So now let's move on and let's have a look at the S&P 500 sector map charts. And over here, that's the weekly performance. As you can see, everything is red, down nearly 2%, between 2 and 4%. And you see the big losers here in services. What do we have? We have Home Depot over here. In basic materials, always bad. ExxonMobil, Chevron, and independent oil and gas. Over here, that's your independent oil and gas. So very, very bad week for them. Next, let's move on. What do we have? We have healthcare, very, very bad week for healthcare. Utilities in green. Industrial goods, remember, GE dumped by Warren Buffett out of his portfolio holdings. So over here, you see GE down 2.5% and back towards a $24.55 a share. Over here, consumer goods except for good week, except for Nike. And in finance, in the financial sector, bad week for the money center banks, the JP Morgans, that's your JP Morgans, Bank of America, Wells Fargo, Citigroup. Credit services doing great. And investment bank had a bad week for Goldman Sachs, Morgan Stanley, and over here the Charles Schwab Corporation, and also life insurance and asset management. Okay, and in technology, bad week, especially for the networking and communication devices, companies like Cisco. And over here in business software, bad week for ADP and yeah, for the whole industry. And in internet information, bad week also for the Google, Facebook, and stuff like that. And talking about Yahoo, I saw that Yahoo now has been acquired from another company. I don't remember exactly the name. So yeah, it's gonna be very interesting to see how things gonna develop in that particular story. Okay, and also bad week for your telecom services. Over here you see AT&T and Verizon. Bad week for them. So that's it. Okay, now let's move on, and now let's do some technical analysis. Let's have a look at some charts. Let's begin over here with the Dow Jones Industrial Average. That's your weekly chart over here with the Dow Jones. You see last week we did analyze and anticipate that particular move over here. You see when you take a look at that particular candlestick, that's a bearish candlestick, that's a reversal. So those two candlesticks canceled themselves. So now the top, it's over here. at 21,845. That's the region of your 4 weeks moving average, and we anticipated a downside for the market to go from the 4 weeks moving average towards the 8 weeks moving average at those levels at 21,688. Okay, so that's it. So now I'm expecting more moves towards the downside, and the market can reach the 13 weeks moving average around the 21,513 points. Okay, and maybe from there they're gonna bounce. So if you continue to see a lot of turmoils, you see in the world's economy, trade wars, risks, nuclear risk, nuclear threats, sanctions towards North Korea, and talks between the US, the EU, Brexit for one part, but the main focus is gonna remain between the US international political policies, and also intervening in that particular area, in that particular story. It's going to be Russia and China, you see, trying to protect their trading interest and their economic interest by, let's say, helping North Korea. Okay, so that's it. So that's going to remain the main focus for international politics next week. So let's see what's going to happen. But internally, you see in what's happening in the US, all the problems that Trump's had with his tweets and stuff on the neo-Nazis, the events of Charlottesville. So you see exactly what's happening, and you see the Dow Jones weakening and markets are going down. I'm expecting more downside for the markets, and the catalysts are already set up. So that's an excuse, you see, and also that's a great time to take profit. And that's what people are doing, you know, big investors, the smart money, they are taking profits. That's it. They're dumping their that's a distribution phase. So we're gonna see the Dow Jones going more towards the downside, and my target for me maybe great probabilities to go towards the 21,500, and maybe more downside, and to try to interact with the 21 weeks moving average at 21,200 points for the Dow Jones. So that's it for it. More moves. I'm expecting more bearish sentiments and more bearish movements over here. So Dow Jones still going down. Okay, and now let's continue, and let's have a look at the Nasdaq 100. Okay, oh no, that's your NDX. Okay, Nasdaq, oh sorry about that. NDX. Okay, Nasdaq 100, and boom, let's have a look over here. Let's analyze it. Let's analyze the technicals and also the price action. And wait a second, please. Okay, we're good. Okay, so now like that, it's good. As you can see, first of all, we saw that great bearish movement over here, the market going up, reaching those all-time highs of 6,000 points, and then the market, you see over here, indecision, and next you see that pattern over here, that particular formation, and that formation is a good evening pattern, and you see indecision trying to go lower. Over here you see the market finally break below the 4 weeks moving average, going below that, and now we are over here at the region of the 8-week moving average, and also region of the 13-week moving average. So we are in bearish mode below that particular trend line over here, and that's it. So now what I'm expecting, you see that particular candle over here, that's your 50% region of that bullish decision candle. So now if the market goes below 57.50, we're gonna see more moves toward the downside. So take a look at the spread between the 8-week moving average. That's your red, that's the red one, and over here that's your 21 weeks moving average, and that's the blue one. So the spread is huge, and that spread means volatility. So the market can still go down. Okay, so we can reach the region of the 56.95 points for the Nasdaq 100. So that's what I'm expecting. Okay, so that's it for your Nasdaq. If that continues, and market's gonna go much lower. Okay, so now let's continue. Oh, by the way, I forgot to do something. I forgot to have a look at the sectors map, S&P 500 sectors map. So before going to the S&P 500 chart, I'm gonna load the chart over here, and we're gonna go back and have a look at ETFs and world and other stocks performance. You see, okay. So that way the analysis is gonna be more complete. So let me first prepare the chart, the chart over here. Okay, let's put it right, let's amplify it, let's zoom in. Okay, so we can see every detail, and so you guys can follow me as I'm going through the analysis and price action. And over here, let's open up another Fimbase, fimbase.com, sectors map. Over here, let's put the ETF. Okay, let's have a look at ETF, and let's have a look at the weekly performance. Because you guys, you already know that me, I do my trade based on weekly performance, so it's clear that way. I can see the bigger picture, and that's a great way that benefits me. You know, I'm profitable doing my stuff that way, so that's it. Okay, so here we have a much better look at the entire economy and the entire market. And as you can see over here, the indices are all in red. Everything is red, from the SPY to the diamond, the QQQ. Everything is in red. All the inverted are in green, so that's normal. US large cap in red, US mid cap in red, small cap in red. Over here, that's curious. You see, that's interesting because the VIX is supposedly the VIX and the markets are supposedly they have to go different ways. And over here you see the VIX had a red week, and the market also a red week. So that's not common, but you see it nowadays. Everything can happen with those algorithmic and high frequency trading and robots trading and stuff like that. So that's it. Okay. And over here, the sectors, you see all the sectors are bad except for real estate, technology, utilities. That's over here, that's your consumer non-cyclical, and your basic materials, but energy, oil and gas and stuff like that in green. Okay, now let's move on. The fixed income, the corporate debt corporate debt, excuse me, in green. U.S. government, sovereign bonds, and sovereign debt, U.S. government debt over here in green. And on the international side, everything is in green. You see, from developed markets, from Europe, China over here, emerging markets, Asia Pacific, Brazil, Japan, Latin America, India, and over here, that's your global index. So that's it. And commodities, global miners in red, your dust and GDST in green. Over here, tech, let's see what's happening with tech. You see technology, you see over here hack is in let's say, down below 30 points, and now we are at 28.64. What does it mean? That means that now the threat and the risk, it's switching from cybersecurity towards more war. You see, war, stuff like nuclear war and trade wars, currency wars, and stuff like that. And I have to give shout outs to Dex, the algo capitalist, formerly known as the Vulcan, for that particular information, because he was the first one I heard when I heard talking about the hack ETF and stuff like that, but that was his courtesy. So Dex, shout out to you, and thanks for that. Thank you for that, for the information. And over here, commodities, you see gold, GLD, crude oil, and stuff like that. Everything is in red. But you see gold reaching 1300s. And next, we're gonna have a look at the gold charts to see exactly what's happening. Okay, because for me, gold must be much higher and includes and talking about that, everyone and everybody, you know, is expecting gold to go much higher, because you see that's a safe haven, and we expect gold prices to reach 1330, 1350 and stuff like that. Okay, so now let's go back to the S&P 500 chart. And over here, as you can see, same as the Dow Jones, you see over here we have your uptrending channel. And over here, we break below the support line. Over here, that's your support over here. And now you see here the market topped at 2480. We have a market high at 2490. Over here, you see the sell-off. Boom. First of all, break below the 4 weeks moving average at that particular region. Over here, you have your convergence point between the 4 weeks moving average and your 8 week moving average, just at the channel's support over here. First attempt to break below, and interaction with your 13 week moving average over here at 2441.50 points. And next week, follow up, break below. First of all, the market trying to go back higher, but sell off during the week. And next, going back below that 13 weeks moving average mark, and next market going way below. And now we are back at the 2420 points region. And take a look at this. We are very close to the 21 weeks moving average at 2415. Okay, so that's it. So markets can reach that particular region. So me, as you can see, I was expecting that move. I was expecting the market to go lower, because all the indicators and all the signals are pointing toward a great sell-off in the market, and that's a great opportunity, you know, for investors to take some profits and to liquidate positions. And that's it. That's just distribution. Okay, so I'm expecting the S&P 500 to go much lower. What you can see next week, what's going to be the probabilities and the scenario. The scenario is going to be markets will open at that particular region. They are trying to retest. You see over here that particular golden mark over here at 2440. That's your 50% mark of the real body, you know, excluding the shadow, but the real body of the that particular bearish candlestick. That's your 50% mark. So markets are the price are going to try to go higher and trying to retest that region. And if you take a closer look, that's the region of the 13-week moving average over here. And that's what's going to happen. And then what can happen, a huge and massive sell-off, and you're going to see the market going down towards that particular point over here, that particular region. That's your region of the 2415 and the region of the 21 weeks moving average, maybe going much lower towards the 2400 mark, and BAMs from that particular region. Okay, so that's it. So now let's move on. Let's save what we did here with the S&P 500, and now let's move on and let's analyze the volatility. Let's have a look at that. So that was pretty interesting to see markets going down and the VIX remaining higher. No, and the VIX, excuse me, going lower. The VIX having a green, a red week also. But as you can see over here, the VIX is in indecision mode. Over here we have a strong bullish candle, and next one last week was an inside week type of chart pattern. You see over here you have your that particular candle inside the fluctuations of the last candle, so that's an inside week candle, but you see huge spikes on both hands. You see both shadows are huge, so that means volatility, and that's exactly what we saw last week. The market's trying to go back up, and then huge sell-off during the week. So that's what we're gonna have, and we're gonna remain in that particular scenario with that particular you see impact on the markets, and so volatility is gonna remain. So next week is gonna be a volatile week, so be cautious. Okay, so that's it, and have a look at the all the moving averages. They are horizontal in parallel mode, you see, except for the 4 weeks moving average. You see going back from here and boom, going straight up. That's the only one who is pointing and having a direction, but the remaining ones are still in horizontal mode. They're moving sideways, except for your 4 weeks moving average. You see, breaking, converging with all the others moving averages, and now pointing towards the 208 moving average over here, and that's your 104 moving average over here, and over here that's your convergence points with the between the 4 weeks moving average and your 52 weeks moving average. That's your convergence points. So from there, boom, it's gonna skyrocket. So that means, and what it means volatility in the markets. Okay, that's it. So now let's move on, and now let's have a look at the XIV. XIV. Okay, that's it. Bam. Okay, XIV. Let's zoom in to see all the details. Oh no, that's a lot. Okay, like that, we're good. And that's your XIV. You see over here, market stopped at $97, and over here, take a look. Last week was a huge sell-off in for the XIV. Break below the 4 weeks moving average over here. Next convergence point between the 4 weeks moving average and your 8 week moving average. Now you see over here convergence between your 4 weeks moving average and your 13 week moving average. That's the red one over here, and now you see that your 4 weeks moving average is going lower. You see, so the move is they're going to the downside. Take a look over here. You have, what do we have over here? Over here we have a gap, and if you take a closer look, we're going to fill this particular gap over here. So, and here you see my move. I'm expecting the XIV to go much lower and to reach the $60 mark, and over here you have your 52 weeks moving average. So that's it. And same thing as we saw in S&P 500. You see market opening lower below the price mark, below the closing price for the prior candlestick, trying to go back up, and then boom, during the week, huge sell-off, and now we are back with lower prices and a close below a lower close. No, so that's it. So now what I'm expecting the market to go lower, to fill the gap, and to interact with your 52 weeks moving average over here at the $60 region. Okay, so that's it for the XIV. I remain bearish. Okay, so now let's have a look at small caps. Let's have a look at the Russell 2000. Excuse me. So that's okay. Oh, excuse me, because my tablet is putting stuff in Spanish. Okay, that's it. Small cap, Russell 2000. Okay, Russell 2000 over here. And what can we see? Wow, huge sell-off. You see, that's it. That's what I was expecting. And now, what are we seeing over here? We're seeing, you see, 1, 2, 3, 4, 4 weeks in a row sell-off. Huge sell-off over here. So that's it. But remember, I already told you, and we already analyzed it. You see over here, that's your trend line. Boom, in green over here. Whoa, excuse me. You see that particular, that's your trend line. Break below the trend line over here. You see convergence. Your 4-week moving average is going down and faster. Convergence over here with the 8-week moving average. Over here with your 13-week moving average. Over here with your 21 weeks moving average, and over there with your 26 moving average, and over here that's your 52 weeks moving average. So that's it. As we saw, you see for the XIV markets are going down, but remember, your over here your Russell is trading in a range. That's a wedge up type of charts pattern, but what are we seeing? That's a range. You see, since December of 2016, that's your support over here. You see, one time that was a resistance here, one time, two times, 3 times, 4 times. You see here trying to interact. You see here the long shadows, and that's your 5th time over there. And finally the market has reached the region of the 52 weeks moving average. Okay, but you see the market's making higher highs, and over here it was higher lows, break below the trend line over here, and going back to retest that 52 weeks moving average. So we are in a range, but we are moving up, but in a range. So from here, let's see what's going to happen, because what do we have if the market going much lower over here? What do we have? Maybe we're going to try to retest that particular level over here. That was the last resistance at 1245, and now that's your support over here at 1250 also, if you want. And but what do we have over here? You have your 1 or 4 weeks moving averages pointing towards that particular direction, that towards that particular price region. And also we have over here, we have a gap, a bullish gap, so that gap also must be filled. So if we break below the 52 weeks moving average, what can we see? We can see a continuation, and maybe the markets are going lower to retest that past resistance, now supports at the region of 1250. Okay, so that's it for your Russell 2000. So excuse me, I'm gonna drink a little bit. Okay, so now let's continue. That's your Russell 2000, and now let's have a look at the bond market, and we're gonna have a look at first of all the T-notes, 10 years T-notes. And TWTITY. Okay, and that's it for that particular assets. And over here, let's have a look at the price action. See, me, I was expecting, as you can see, a continuation. See from here, boom. Oh, excuse me, I'm trying to. Here I was expecting that kind of move. You see the market going higher, but that didn't happen. You see we have an indecision type of doji, and that's it. So the bond price trying to go lower, and then boom, came back up, but you see with no direction. So that's an inside week candle, but with, you see, a lot of volatility during the week. But now you see we make a new high, and that particular high over here coincides with those ones, and you see what is the natural resistance. That's your 2-weight week moving average at 127. So that's it. Now we are interacting with that particular moving average, acting as a natural resistance. So the goal right now is to break above that particular moving average, that particular resistance, and to go back towards the 128. See, 128. We have another one, that's your 104 moving average acting as resistance, and then finally the channel's resistance over here at 128.77. Okay, so it's gonna be tough, you see, and that's exactly the same thing you're seeing with gold reaching 1300, but then it's hard for gold to go above that particular level, but that's it also. And remember, if you see higher bond prices, that means lower yields. Okay, in particular over here for the treasury notes, the 10-year treasury notes, higher bond price means lower interest rate yields for that particular bond. Okay, so now let's continue, and now let's have a look at the treasury bond, the 30 years treasury bond. Oh, sorry, US, and that's 30, and that's your bond yield. No, I need okay, T-bond futures. Okay, that's it. You see exactly the same thing, but over here you see that the candle wick, the candlestick has a little bit more, has a little bit more of a body, you know, for itself. So that's it. The other one that was complete doji without the body, only long shadows, but this one has a body. But you see, we are retesting that particular channel, uptrend channel support over here. We are above the 52 weeks moving average here in pink, but now we need to go back, to come back in that particular uptrend channel. And you see, first of all, the target will be reaching the 157 resistance, and then going higher towards the 158 resistance. Okay, so that's it. Okay, that's exactly the same thing, same probabilities and same type of price action as you already saw earlier with the treasury notes, the 10-year treasury notes. Okay, so that's it. So remember, over here, if the bond price are rising, that means that the yields are going lower. Okay, so that's it. And now let's have a look at the DXY, the DXY, the US dollar future. So remember, earlier we saw an article at businessinsider.com talking about trade war with China. So remember that trade war means currencies. Okay, so remember that the dollar needs to do something. So it seems that the dollar has found a bottom over here. So remember, we analyzed that the dollar already bottomed at that particular level. You see the 93 points over here trying to interact with that particular level. From there it goes straight up, rally towards the more than 100 points, and now we are back at the 93 mark. Okay, and just over here, what do we have? We have the 208 moving average. Okay, so now let's have a look at the price action. See over here, that's your moving averages. You see, we're trying to go above the 4 weeks moving average, and we're trying to reach over here. That's your 8 weeks moving average. You see, you see that. And what's the interpretation? You see how we can interpret the right interpretation. You see, for that particular candle, that may be a pointer. Okay, so next week I'm expecting the market, the dollar, to open right here and maybe trying to go back to 94, and from 94 you see trying to reach, you see, step by step, trying to reach those particular moving averages, and gain a power, and the dollar to gain strength again. But something very particular. I was watching Bloomberg last week, and I saw a high net worth portfolio manager. You see that your private wealth manager. You see for UBS, ultra high net worth. He was the chief investment. You see, and he was talking about the dollar versus the euro dollar currency pair, and you see that we saw a rally, a strong rally with the euro, but he was saying that they got out, of that particular position. So they sold the position, and now they're out because the euro has rallied too much. The dollar has felt too much, and now it was the perfect time to get out. So that's it. So what does it mean? That see, the big players, the smart money, they're realizing that the dollar has reached a bottom, and that was their target. So take a look. The smart money, the big institutions, your private wealth and big asset management are going out at that particular level, and that's your 93 region. Because of what? Because that was the natural target. The dollar already visited that particular region, and now you see that US is trying to go back and have some trade wars, but you have to remember the Eurozone, they're running a surplus, and the United States are running a deficit. So what it means, for your currency, the euro, they are in a range, okay? So now you see, to understand that, let me pull up the chart, and you're gonna understand that. You see, they can trade in a range, but at the end of the day, they know exactly what they need to do for the currency. So now take a look. The people at UBS got out over here at 118. You see, and that particular region coincides with your 93 point mark for the Dixie, and they got out at that particular region, and from there they expect the euro to go lower, because for them, as an exporting nation, bloc region, whatever you want to call it, they need a weaker currency. The currency is good in those levels. Take a look. From 2015, the euro is in a range. Your support is over here at 105, and your resistance, your max resistance, your first resistance was 114, and your max resistance was 118, region of the 208 weeks moving average. And that's very, very curious. You see, me, I was expecting that move, because that was my target, when I was trading the euro to rise and to gain strength and to reach that particular level, and from there going back lower, because you have to have a look at the fundamentals. Your fundamental data is critical, is crucial for you to understand the positioning. You can see a country having a weaker currency, but you see we are in a trade war. A trade war meets currency war. So you need to understand that people, their money are going to fluctuate, but in a range where it's comfortable, and where it's let's say it's good for the economies, for the exports. That's it. And that's the same thing for the US dollar versus the Japanese yen, and that's the same thing for the US dollar versus the Chinese renminbi, or the Chinese yuan, as you want to call it, okay? So that's exactly the same thing. So you're going to see fluctuation, but between a range. But overall, when you see over here, the euro, it's much lower. And take a look. You can pull up any chart that you want. You have a greater chart at Trading Economics, and there you're going to find out the trade balance for those particular countries. The US is in a deficit, and the other countries are in a surplus, because they are exporting goods towards the United States. See? So what does it mean? It means that they need a weaker currency. And in order for the US to buy those goods, the US dollar is going to be much stronger. And you see that's one of the things that President Trump is trying to do. He's trying to weaken the US dollar, but in order for him to do that, he needs more industries in the US. He needs more infrastructure and industries and manufacturing and manufacture product in the United States, and those products must be sent out and exported towards other nations. But like a month ago, I saw a documentary that was an investigation documentary, a report from Goldman Sachs talking about that particular policy of President Trump. They say that it's impossible to do, but in order for him to achieve that, it's gonna last. It's gonna have that's a 15 years process in order for the U.S. to become a exporting country as China. 15 years. You only have the chance to be president twice, 2 mandates, so 8 years or 15 years. We are in 2017, so 2017 plus 10 years, that's 2027, and next plus 5 years, that's 2032. So that's impossible, and that's the time the US needs to become an exporting nation. You can go to goldmansachs.com and take a look at that. Look for that particular article in their archives, and you're going to find it. They studied it. They made a great investigation, because there's a lot of things going on with that particular case and with that particular policy that he's trying to make. They need infrastructure, they need labor forces, they need higher wages, they need skilled workers and stuff like that, and it's impossible. It's gonna take them 15 years to achieve that and to be effective. See, but in 15 years, where China is gonna be? In 15 years, where's Japan is gonna be? In 15 years, where's the EU is gonna be? You see, take a look of that. You people living in the United States, take a look at only the cars. You see Toyota, Volkswagen, Audi, Porsche, Mercedes-Benz, BMW, and other stuff, Suzuki. These are foreign cars. Me, I'm living here in Europe, and I'm seeing all of those cars. You see Rolls-Royce and stuff like that. But now Rolls-Royce is owned by BMW. But you see, we don't see US cars over here. You see your Chevrolet, Dodge, and stuff like that. We don't see them. See? So think about that. So that's a tip for you guys over there. So now you know. Okay, so now let's move on and let's analyze commodities now. Let's have a look at crude oil. Remember earlier we saw a news about oil in Alaska. We saw a news for the energy sector, Saudi Arabia with the Prince, MBS, Mohammed bin Salman, and stuff like that. And that's it. Okay, oil. What's happening with oil? Remember, we had a OPEC meeting 2 weeks ago. They agreed to cut production with the OPEC and non-OPEC nations and stuff like that. So, wow. So now, what can we see? We see over here that's your $50 mark to $50 a barrel. Oil reached that particular level, and from there, boom, another sell-off over here. What can we see? Topped over here at 46.20, and that's a retest of your particular, you see over here, that's your trend line over here. That's your channels, downtrend channels resistance, and now we test as a support at that particular level. So from here, maybe that's your A, B, C, and trying to go to a D over here at 54. Maybe that's just a retracement. If I'm taking a closer look, you see, boom, boom. What is it? That's maybe a... we are close to a 50% retracement, you see. So from here, maybe we're gonna have another leg up, and that's your C. I remember your A, B, C, and D over here. You see, because markets are always moving like that. See over here, that's your A, B, C, D in the downtrend. And now you see we broke that particular trend line, and now maybe that's your A, B, C, and D to the upside. Okay, so that's it for oil. Remember, be cautious above 49.25, but maybe me, I'm gonna wait until I'm gonna see signals, strong buying signals above and a close near or close or above $50 a barrel, and let's say between at 50, that particular level over here, from 51, maybe I'm gonna buy. If I'm gonna go more aggressively, maybe I'm gonna enter probabilities for a buy around $50 a barrel. But first of all, I need see a continuation of that particular bullish candle over there. So you see, that's it. I'm gonna do this. I'm gonna clone this one, and bam, over here. That's what I need. Okay, so that's it for oil. Watch out, because anything can happen, you know, in those markets. So now let's move on. Oil, and now let's do some precious metals. Gold futures. Okay, remember I was talking about gold above, oh my gosh, you know, all of my setups and all of my analysis is gone once more, but nothing. Okay, let's do that one quickly. You see over here, that's your $13 mark. You see over there, over here. So we need gold to be above that particular level. You see over here the pivot point. Okay, you see over here your pivot point over here, that particular level. You need gold to be above that particular level, because take a look over here, that was your pivot point towards the downside over here, but now we need gold above that level. You see here, 1 time, 2 time, 3 time, failed, but now you see we reach those 1300s. We reached the $13.05 an ounce per ounce, but now we need a continuation, you see. So that's it. Maybe that's just a pause, you see, in reaction, in correlation with what we saw in the markets. And if those risk continues, you see risks, nuclear war risk, trade war risk, and you see continuation in the sell-off in the stock market. Investors are going to look for safe haven, and so that's it. So continue to accumulate. Me, I'm continue to my accumulation of gold and silver. So that's it. Okay, but also we are way above our 4 weeks moving average, so we need a kind of interaction. So, but this time I believe that gold can go higher, so that's the reason why we have risk management. So that's it. So I'm gonna wait, and if I see signals, maybe I'm gonna place an order at 13.10 and start buy, and the let's say my target will be $30 target. You see, 13.10 and target 13.40, and long-term target here, 13.40 and 13.50 for gold. But first of all, I need confirmation. Remember, confirmation. You need confirmation. Okay, so that's it for gold. Now let's have a look at silver. Yes, silver futures. Okay, and for the silver, over here I have my analysis and stuff like that, so that's good. For silver, that's exactly the same thing, you see, but over here we are in a downtrend channel. As you can see over here, you see boom, boom, that's your support over here. The dotted red line, that's your downtrend channel, and support over here, that's your resistance. and we are here. We broke above that particular channels, downtrend channels resistance. But take a look at all the moving averages. They're going sideways with no direction, except for your 4 weeks moving average converging with your 8-week moving average over here, 13-week moving average over there, and over here that's your 104 moving average, 104 weeks moving average. Over here we have your 21 and 26, that's your 52 weeks, and that's your 208 weeks. So now what we need continuation, but be cautious because those markets are heavily manipulated, and they can go and they can smash the price down once more and once again, and we can see another sell-off in the precious metals. Also for gold, rejecting those 1300s, and for silver, rejecting prices above 1750, 1740. So that's it. So be cautious, you see. So now I want to see prices above 1745, 1750 to start to buy, and my target will be first of all 1763, and above that 18 and 1850. Okay, and if it goes down below, but below that particular candle over here, so below 1625, I'm gonna be selling, and that's a huge opportunity to continue my stacking, because the price of silver is going to be cheaper. So accumulate some coins, some bullion, some eagles, some maple leaf, some Britannia, and all the good stuff. Okay, that's it. So now let's continue commodities. Oh, now the crypto space. Okay, first of all, let's have a look at the ranking. We're only gonna do the top 5 because now that's a lot of talk. I'm tired also, and I'm hungry, and so that's it. So we're gonna wrap it up. Okay, first of all, Bitcoin number 1, number 2 over here, Bitcoin Cash, oh yeah, and number 3, Ethereum, number 4, Dash, number 5, Litecoin. Bitcoin, first of all, Bitcoin the classical, the Bitcoin, the BTC. You see, we had a record high at $4,500, and the market cap reaches $75 billion, you see. And I was watching the streets on YouTube, and no, the Business Insider, the bottom line, and they compared the market cap of Bitcoin, and when the Bitcoin was at record height on 4,500, it equates the market cap of Netflix. Netflix has a market cap of $72 billion. So that was quite interesting. But you see, due to the volatility in the cryptocurrency space, we already see immediately sell off, Bitcoin dropped, and now take a look, the price is at $4,000, and also we're gonna have a look at the chart. I think that it touches the 3,800, but that's it. But for on the other parts, you see Bitcoin Cash rising heavily, rising strongly, and market cap now at $12 billion. And number 3, Ethereum, ETH. Great week for Ethereum, so I'm trying to see, and I'm waiting to see, and I want to see Ethereum at $300, and from there going much higher. Number 4, Dash, $300, so that's good for Dash. And Litecoin LTC at $44, near the $45, and that's pretty good for the cryptocurrency. So now let's have a look at some news. You see, here we are at coindesk.com, and what do we see? The new Pachinko, exploring the economics of initial call of ICOs. Okay, Bitcoin Cash price nears $1,000 as breakouts continues. 10 reasons why central banks will miss the cryptocurrency's renaissance, and making sense of crypto economics. And here Bitcoin prices retreats towards $4,100 while Bitcoin Cash soars. Yeah, we already saw that. $700 and rising. What's driving the price of Bitcoin Cash? This one is interesting. SEC statements per Shapeshift to review cryptocurrency listings, and that's it. Bitcoin Cash is now more profitable than mine than Bitcoin. Oh, I didn't know that. Okay. So here you have a lot of great articles. So please, people, visit CoinDesk, www.coindesk.com at your own discretion. So I'm gonna leave it there. So now let's go back and do some charting over here. Bitcoin USD. And yeah, Bitfinex Forex over here. Okay, that's it. And what we can see, you can see now that the Bitcoin is going higher, and over here reaches the $4,500 mark. And what you can see now inside the candle, you see way far too much extension. We are far away from our 4 weeks moving average. So now that's just profit taking. You see, remember, that's a huge sell-off. We gave up almost more than 50% of the weekly gains, and now I think it's distribution time. Investors and speculators are taking profits. Okay, first of all, target, we're gonna go down and reach the $3,800 mark. And next, take a look, the huge spread that you have between your 4 weeks moving average over here and your 8-week moving average. That's volatility. So 3,800 to almost 3,200, that's $600 of volatility. So that's huge. Okay, so remember, those are the risks. So now here in Europe we have something wonderful. It's called the CFDs, and so I can leverage my positions with Bitcoin derivatives. So that's it. I have almost a 10 to 1. So that means that I only have to deposit a 10% of the Bitcoin's value. 10, maybe some brokers give a 5%, 20 to 1. Other brokers gave a 10 to 1. So that's it. And so I think it's time to put some shorts over here. So I'm gonna analyze that, and I'm gonna tell you guys next week what I'm expecting. But quickly, just like that, I'm gonna short Bitcoin if Bitcoin is below, I'm not gonna say 4,000, but 3,800. Below 3,800, and my goal is going to be 3,200, or maybe a retest of that particular resistance you see over here. Now support over here, region of the 8 weeks moving average and 13-week moving average. That's going to be my target, from short from 3,800 towards 3,200 and maybe $3,000. Okay, and above, let's say, and above 4,400, I'm gonna be long again on the Bitcoin. Okay, so that's it. We're only gonna do 3 cryptocurrencies, you know. So first we did the Bitcoin USD. Also I wanted to have a look at something over here. Let's go back to trading economics and let's have a look at the Forex exchange performance. You see over here, you have your Bitcoin. Bitcoin is now in the family of the foreign exchange market, and that's the best performing currency. Let's have a look over here on the daily basis. Bitcoin was the best performing currency last session on Friday, but obviously the cryptocurrency is open on Saturdays and Sundays. On the weekly, you see over here, Bitcoin had a 12.7% gain last week, and on the monthly that's an 83.5% gain, and on the yearly that's a 625% gain as of the year to date. And take a look at the other currencies. The only one doing well, that's your US dollar, South Korean won, and your US dollar yen, and your euro USD. That's it. Okay. And now let's go back and let's analyze Ethereum, ETH/USD. And here, if I'm not mistaken, I have my setups with GDAX. That's it. And over here, what are we seeing? Nothing. We remain in the inside week candle. You see 1 week, 2 week now, and now that's the opening. You see me, I was expecting a move higher from that particular region over here to go boom straight up and back towards the $400, but maybe that's a B, C, and a D. So now I'm expecting to see more higher prices, but you see it, Bitcoin Cash and Bitcoin continue to soar. So you see these or those two particular coins are the leaders in the cryptocurrency space. So hopefully they're gonna influence the other coins and take them prices higher. Okay, so that's it for Ethereum. No direction, so I'm expecting but higher probabilities of higher prices above $325 over here. And now let's have a look at Litecoin, LTC USD. And over here, yeah, I think that's with GDAX also. Yeah, okay, that's it with GDAX. Perfect. Okay, and over here, exactly the same thing. Exactly the same thing as we saw with the Ethereum. No direction. You see, from here, we are inside week candle. You see, that's 1 week, 2 weeks, 3 weeks, 4 weeks. That's a month. 5th week in a row, 6th week, and 7th week. Yes, 7 week of inside week candles and sideways movements. So you see that particular bullish candle, and next that's a bearish reversal candle. So those two candles canceled themselves. So now the price, the region, the very important region, critical region, that's your $37 marks here. Okay, so now what I'm expecting the Litecoin to go lower over here to reach your that's our 21 weeks moving average, 26 week moving average. Over here you see that's the region for your 52 weeks moving average. You see over here we have a convergence. Those two moving averages, the 4 weeks moving average and your 8 week moving average, are moving of I can say just one moving average. And maybe they can, you see over here I was expecting prices to go much higher, so maybe we can see the price soaring towards the $50 mark, 52, and that's it. But no direction, I can do no trade. Okay, so that's it, people. Thank you very much to being with me on this particular time to trade the markets. So have a great week, great trading week, manage your risk, take some profits, and see you next week. Okay, bye.